Welcome back. If you're keeping an eye on, the really significant shifts in global finance and industry, the electric vehicle sector is, well, impossible to ignore.
Absolutely. And right at the core, powering so many of those EVs, you've got CATL, Contemporary Amperex Technology. They're the world's biggest EV battery maker.
And that's what brings us to today's deep dive. CATL has been making some major strategic moves lately.
That's right. We're focusing on two big things: their recent secondary listing over in Hong Kong and their huge expansion into Europe with a new gigafactory.
These aren't small adjustments either. We're talking moves with potentially massive ripple effects for the EV market, supply chains, and definitely for investors.
Exactly. Big picture stuff.
Okay, so let's start with Hong Kong. That listing generated quite a bit of buzz.
It really did. So this May, CATL completed its secondary listing on the Hong Kong Stock Exchange. The ticker is 3750, and trading started May 20th.
And the scale of this offering.
Pretty significant. It raised around 4.6 billion US dollars. That makes it the largest global equity offering we've seen so far this year.
Wow. Okay. And for investors looking at getting in, what was the share price situation?
Shares were priced at HK $263. That worked out to be about a 6% discount compared to their main listing in Shenzhen.
A slight discount then. Was there much appetite for it?
Oh, incredible appetite. The offering was, get this, about 115 times oversubscribed.
115 times. Well, that speaks volumes about investor confidence, doesn't it?
It certainly does. Very strong demand.
Were there any sort of big names anchoring the deal, cornerstone investors?
Yes, several major players came in as cornerstones, committing about $2.6 billion in total. You had names like the Kuwait Investment Authority, Oaktree Capital, Lingotto, quite a roster.
Significant institutional backing. And where's all this capital going? Did they specify?
They were quite clear. Roughly 90% of that $4.6 billion is earmarked specifically for one project: their massive $7.3 billion battery plant being built in Debrecen, Hungary.
Okay, so the listing directly fuels the European expansion. Let's unpack the strategy behind choosing Hong Kong, though. Why a secondary listing there?
Good question. For CATL, it's about a few things. First, broadening their shareholder base. Listing in Hong Kong attracts more international investors, which can, help with global perception and maybe even valuation.
And funding.
Exactly. It gives them much easier access to offshore capital, which is crucial for funding overseas projects like the one in Hungary. Less friction than moving capital out of mainland China, potentially.
Now, there was some complexity around U.S. investors specifically, wasn't there? Tied to geopolitics.
Yes, that's right. Given the, let's say, current tensions between the U.S. and China, CATL structured the deal using what's called Regulation S. Basically allows them to offer securities outside the U.S. without needing SEC registration. So U.S. investors were excluded.
And there's that Department of Defense list issue, too.
Correct. CATL being added to a U.S. DoD watch list put, political pressure on some of the big U.S. banks initially involved, like J.P. Morgan and Bank of America.
So CATL had to adjust its investor targeting.
Precisely. They pivoted and really focused their efforts on attracting investment from Europe, the Middle East, and other parts of Asia. It's a, pragmatic response to the geopolitical realities.
Fascinating. And I read the deal terms, the fees for the underwriters, were unusually low for such a huge deal.
Yeah, that's another interesting angle for anyone looking at the financials. The underwriting fees were remarkably lean, just 0.2% fixed, plus a potential 0.6% discretionary success fee.
Compared to what normally?
The industry standard is typically more like 2% to 2.5%. So this suggests CATL had considerable negotiating leverage, likely because the demand was just so high.
Right, that oversubscription rate again. Could this whole listing give a boost to the Hong Kong market itself?
It definitely could. A successful, high-profile offering like this, especially in the current climate, can be seen as a positive sign. It might encourage other major Chinese firms looking for international capital to consider Hong Kong, a bit of a role model, perhaps.
Okay, so the Hong Kong listing provides the fuel. Now let's look at the engine it's powering. That gigafactory in Debrecen, Hungary. What's the scope here?
We're talking about a $7.3 billion investment. The ambition is for this to become Europe's largest battery production facility. It's absolutely central to their European strategy.
And the timeline. When will it be up and running?
Full battery cell production is scheduled to start sometime in 2025. But interestingly, they've already begun some assembly work nearby at a lease site using cells imported for now, so they're phasing it in.
For investors interested in ESG factors, is CATL highlighting sustainability aspects?
They are. They're emphasizing that the plant is being built to Industry 4.0 standards. It includes things like advanced adiabatic cooling towers and gray water recycling systems. The aim is to cut water usage by around 50% compared to conventional methods.
Significant. What about jobs, local economic impact?
The projections are substantial. They plan to create over 2,000 jobs just by the end of 2025. And as the plant ramps up to full capacity, that number is expected to rise to over 9,000.
That's a huge number of jobs for the Debrecen region.
It really is. And they're also talking about talent development, partnering with the local university, the University of Debrecen, and vocational schools. They're setting up dual education programs and even a new training center, plus some community engagement on health and sustainability initiatives.
Sounds like a very comprehensive approach. How does this massive European push fit into CTL's overall global picture and market standing?
Well, CATL is already the dominant player globally. Their market share was around 38% in 2024, actually up a bit from 36% in 2023. This Hungary plant solidifies their foothold in the crucial European market.
Are they looking beyond just manufacturing, like recycling?
Yes. They've mentioned exploring battery recycling facilities in Europe, too, that would move them towards a more, closed-loop, circular supply chain on the continent.
And it's not just passenger cars they're focused on, right?
Correct. They see big potential in the heavy truck sector, particularly in China. Projections suggest that maybe 50% of heavy trucks in China could be electric by 2028. That's up from only about 10% in 2024. So another big growth avenue.
Okay, let's quickly touch on the recent financials then. How did 2024 pan out for them overall?
It was a bit of a mixed bag, reflecting market pressures. Their net profit was up 15% year over year, reaching $50.7 billion, which is roughly $7 billion US. However, that 15% profit increase was actually their slowest rate of growth in 6 years. And their revenue, for the first time since 2015, actually saw an annual decline. It dropped 9.7% to about $362 billion, or around $50 billion US.
Why the revenue drop and slower profit growth?
Mostly attributed to the intense price war happening in the EV market within China. Lots of competition putting pressure on margins.
But despite that pressure, they're still leading the pack.
Yes, they still maintain a clear lead over competitors like BYD and LG Energy Solution. What these financials seem to show, alongside the strategic moves we've discussed, is resilience. Through seemingly effective cost management, that crucial international expansion to diversify markets, and, as the Hong Kong listing shows, skillfully tapping into capital markets when needed.
So, summing it up for investors, despite some near-term headwinds like price wars, CATL is making these very large, very strategic bets on long-term global leadership.
That's exactly the picture. The Hong Kong listing and the massive Hungary investment aren't just small tweaks. They're fundamental commitments to staying number one in the EV battery world for the foreseeable future.
Right. So to wrap up for you listening, if you're involved in the EV space or watching related investments, CATL's moves, the huge HK listing, the multi-billion-euro Hungarian plant, are really critical signals. They show a clear ambition to cement their dominance globally.
And these actions, well, they're likely to significantly shape the EV market, the associated supply chains, and definitely the flow of international investment in the coming years.
It leaves you with a question to ponder, doesn't it?
It does. Maybe think about this. As CATL, the clear market leader, makes these major financial and manufacturing plays, how might that ultimately steer the whole trajectory of the global energy transition? And perhaps more pragmatically, what kinds of new investment opportunities might ripple out from these decisions? Something to keep an eye on.